Hello viewers, in this video I'm going to show you how to prepare income statement, statement of financial position and statement of changes in equity of uh, Starbold Ltd for the year ended 31st of March 2007. So the first thing I will be doing is preparing the income statement format, statement of financial position format and statement of changes in equity format. So let's prepare the first format. Income statement of Starbold for the year ended 31st of March 2007. Over here I will be preparing in statement of financial position. Of Starbold for the year 31st of March 2007. And then here's the statement of changes in equity. Of Starbold for the year ended 31st of March 2000 and X. Let's have the pound sign, starting with the revenue. Leave some space, less cost of sales. Opening inventory, purchases, and then we have less closing inventory. And then gross profit, and then less expenses. Leave plenty of space, and then you will have tax, and then profit for the year. I will draw the lines here, double lines. Next, I will be completing the format of statement of financial position, non-current assets, leave some space and then write current assets. Leave some space and then we need to draw the lines here to calculate the total assets, and then equity and liabilities. Leave some space and then write current liabilities. And then non-current liabilities. Draw the lines. Now let's complete the format of statement of changes in equity. We have share capital, retained earnings, and then the total. Over here we'll have opening balance of share capital and retained earnings. Draw the lines at the bottom. Okay, now you can see my formats are ready. The next thing is I will be following my trial balance. So the first item on the trial balance is the office rent, which is an expense. And that is 100. Next is audit fee, which is 20. Salaries, and the salaries is 150. So make sure you tick the figures which you have picked up already. Next is the irrecoverable debt, 25. Next is administration expense. And that is 125. And then distribution is 25. And then storage cost is 100 and advertising is 50. Because I need some space, so I'm going to move this a little lower. Advertising cost. Next is share capital is 206. And I'm going to update my statement of changes in equity as 206. Opening balance of share capital. Next is cash in hand, which is 33. That will go in my current assets, cash balance. And that is 33. Next, I have trade receivables of 233. Next, I have non-current asset investments, 280, which will be recorded under the non-current assets. That is 280. Next, I have dividend received, which is 8. Now, dividend received should be part of my gross profit. It will be added in my gross profit, and I'm going to write 8 over here, and behind that I'm going to write add dividend received. Next is dividend paid, that is 20. The dividend is paid out of your retained profit, so I need to record it in my statement of changes in equity, 20. dividend paid. The next figure is over provision of last year's corporation tax is 3. Means last year we had an over provision of 3. So what we are going to do is this year's tax, which is recorded in the income statement, needs to be subtracted by 3. So you can see my taxation figure. I still have to find out what is the tax figure, but I know whatever the figure is, I need to subtract 3 out of it. Because we create a provision, we record it in the income statement as a tax to pay, but we pay after 1 year, and then from tax point of view we have to calculate the tax under the HMRC's rules. So either it is more we have to pay or less than what we have calculated. If we have to pay less, then there is an over provision we have created. If we have to pay more, then we have to add the under provision of the last year. Land and building is 200, and the accumulated depreciation of that land and building is 30. And you can see I have left the bracket open because I will be calculating the depreciation for the year. Next is plant and machinery is 400 and the accumulated depreciation is 170. Plant and machinery. Well, I've just written P and M. I wouldn't suggest you to do this in the exam. It's better to write the full name, plant and machinery. Next, retained earnings, 1st of April 2006, that is the opening balance, 235. So I'm going to write 235 in the statement of changes in equity, 235 as an opening balance. Of course, I need to write that in my equity. So I have a choice. I can work out the retained earnings over here and then write the final figure there. So I'm going to leave that blank over here at the moment and wait for my final calculation in the statement of changes in equity. Next figure is purchases of 1210. So I'm going to write 1210 in front of purchases. Then my revenue is 2265. And my opening inventory is 140. And trade payables is 194. Now I have picked up all the figures from the trial balance. Let's look at the notes. It says that the closing inventory is 150, but the net realizable value was 85. So we need to look for the lower value, which is 85. So this is a stock worth 150, but the value, net realizable value, means if we sell it, we can only sell it for £85,000. So under IS2 suggests that we should be taking the lower of the cost and the net realizable value, which is 85. So in my closing inventory, I will be recording 85, and over here be recording 85. Oh, sorry, it's an asset, so it will be recorded in my current assets, 85. Next additional note says depreciation for the year to 31st of March 2007 is to be charged against administration. Okay, so the depreciation charge for land and building is 5. It's 5. And the depreciation for plant and machinery in this question is 40. So the land and building is 5 and plant and machinery is 40. So let's record them in the statement of financial position. 5, 40. And we need to record over here in the administration. So what I can do is I can write 125, which is the administration expense, plus 5 plus 40, and I can erase this. I'll leave the bracket open just in case if there is any other expenditure that needs to be added into the administration expense. Next is corporation tax is 165, is to be provided against profit for the year 31st of March 2007. So 165 is the prof tax, which also needs to be recorded as a liability. 65. So 165 is the tax for the year we have calculated minus the over provision from the last year. And this 165 also needs to be recorded as a liability because this 165 will be paid next year. And next year we will see if there has been an over or under provision again. Number 4 is salaries are to be apportioned equally between cost of sales, administration expense, and distribution expense. Now you can see that salaries are here, 150. That needs to be apportioned between cost of sales, administration, and distribution. Even if I'll not distribute them among the 3, cost of sales, administration, and distribution, I will still get my answer right. So you have a choice. You can leave this 150 as it is, or you can split that. So I'll show you how to split it. If you are splitting it between the 3 costs, then erase it from here. 50 will be added into administration. In the distribution, let's show 25 plus 50. So this 25 has gone into the bracket. And then let's add into cost of sales as salaries. So now you can see 50 has been recorded in cost of sales, 50 in the administration, 50 in the distribution. Now let's close the accounts. Let's do the maths. First of all, cost of sales. 140 plus 1210 plus 50 minus 85 gives me 1315. That is my cost of sales, which needs to be subtracted from the revenue, and that will give me 950. 8 will be added. Then I have to add all the expenses. Rent is 100, audit fee is 20, irrecoverable debts is 25, and administration expenses and 20, and distribution expenses are 75, and then storage is 100, and advertising cost is 50. If I add all of them, the total will be 590. Write that in brackets. So my profit before tax be 368. Let's record the tax. The tax is 162, which will be subtracted, and then my profit for the year is £206. I need to add that into my statement of changes in equity. £206, that is profit for the year. Now let's add the totals. Share capital 206 plus opening retained earnings is 441. This 20 will be over here, and this is 206. At the bottom, 6 to 7, adding them vertically, 421 and 206. We have already written 206 in the capital. Next, 421 needs to be included in the retained earnings. Now let's close our non-current assets. So the land is 200 minus 30 minus 5 is 165. Then plant and machinery is 400 minus 170 minus 40 is 190. Adding all three of them together, 635. Next is current assets. Adding all three of them is 351. Now adding the non-current assets and the current assets, the total is 986. Similarly, adding my current liabilities, it's 359. Now adding my capital, retained earnings and current liabilities, the total is 986. So you can see that my non-current assets, which are 986, are equal to capital plus the liability, which is also 986. I hope you'll find this video useful, and this is the easy way to answer the question. Thank you.